Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, February 2nd. Okay, I'm starting the video at about 7:10 in the morning. The indexes are up about 0.8%, down slightly from the early morning highs, which had them a little over 1%. So sagging just a little bit, but if the market holds things together for the next 2 hours, then we'll have another gap higher at the open, just like we did yesterday, which turned out to be a really, really bullish day. The action yesterday made you almost totally forget the action of last week, which was very soggy with a very poor day on Friday. And it just goes to show you, some of these Wall Street adages like bad selling never ends on a Friday turn out not to be true. We had a rip-roaring rally yesterday for no reason I could find. So that just speaks to have an open mind. And if you get trapped in thinking something's going to happen to the point of paralyzing you when you see contradictory evidence that goes against what your pre-market idea might be, it's going to hold you back during the day. So try to stay loose and flexible at all times, not get married to a particular narrative, and then you'll have that freedom to execute around what you see without hesitation. We're going to go through some charts here like we always do, and I'll show you the key locations. And if you've been listening to the commentary for a while, you probably already know where those levels are. So, but even in your own stocks that you're trading, the levels where you can say, above here is bullish, but below here is bearish. Those are the visual cues that you can use during the day, or even in your swing trading, your multi-day holds, where if you can hold a certain level that would be bullish and keep you in the trade, but any break below that level, then you got to exit. So we got the tag of the 50 that we accurately nailed as being a really important location. And right on cue, the dipsters came in and bought that up yesterday. So let's take a look at it. One thing I did want to note before we dive into the index charts is the VIX. And you can see from the end of January, we've been printing a fairly steep rising channel, a series of higher highs and higher lows. And my question is that bullish? Right? Should we be going neck deep into longs against a backdrop of a rising VIX environment? That's got me scratching my head. If I look at the price action yesterday, there's no other thing to say other than very bullish. 2.5%, 3%, a lot more in individual names. I think the volatility is definitely back, so we need to be aware that there could be a 3% down day, right around the corner. And how that's affected me is I'm focusing more on shorter time frames now in this environment. I don't want to go out there, with a ton of long exposure. I'll get long. I have longs now, like for instance, yesterday I got long IWM, SPY, QQQ, Facebook, Microsoft. What else? I got a little speculative position in FUBO, FUBO long, and JMIA, JMIA long. Short-term duration kind of stuff. Just, watching it, playing it day by day. I realize that for some of you that's just not feasible, and that's fine. What I would recommend, and I say so in the blog post this morning, get yourself some call spreads with the higher vol environment that far out strike that you're selling. You'll be pulling in more premium than usual, and that will knock down the cost of your spread, and it'll also stabilize it in a higher volatility environment. And just watch your overall exposure. Instead of having 20 names long, maybe you pare that down to 8 or 10, and then watch your position size as well. So there are ways to play it, but I can't see getting wildly bullish here, or wildly bearish, excuse me. Just having had the 50-day hold on quite a number of indexes, sector ETFs, etc. So that's a good line in the sand now. If we lose the 50-day going forward, then that downtrend will resume. So let's look at SPY. Pre-market, we are in this 380 area, up about 1%. I think as long as we hold 378, I think you can be long and look for 381. Realize again that there's going to be a gap below. So, for instance, if they run it south to fill that gap down to yesterday's close at 376, I think you want to be a buyer there for them to ultimately reverse it. And that way you can set your tight stop there just below yesterday's close. And then you'll have a low risk long for later in the day. Now don't forget, Amazon and Google report after the bell. And I just looked, and Amazon was up about $50 in the pre-market. We'll see if that sticks. But Amazon's really been feeling it the last couple days. So I haven't looked at Google, but I'm assuming strong reports from both. Now we'll have to see how the market reacts. But those are going to be important names tonight after the bell. Here's a 30-minute chart. Again, I anticipate opening around this 380 area. We've got overhead resistance at 381 and then a gap at 381.50. If after we open and either fill the gap or go higher, I think if you're not in, I would wait for 381.50 for SPY to move into this gap, and then look for a gap fill up towards 384 if you're a nimble active trader. If there's softness, watch for the PPO rollover at the 0 line, and for RSI to come back below 50. Those would be warning signs of a pullback. Now I've got this downtrend channel here. Something that would be bearish would be to open up at, say, 380, come back down to fill the gap, but then not have it not hold. That would make this look like a fake breakout yesterday, and then we'd be back into this down channel. And if that were to occur, a breakout here, come back down to 376 and keep going, your target would be down here at the bottom of the channel, re-entering this channel from above and not bouncing out. So that's a downside scenario. Be open to it. Have that be part of your narrative. If we drop below yesterday's close, that's going to be bearish. Qs. We are up here above this midpoint line at 324 with a gap above at about 326.50. Qs are set to open higher. Watch for the gap fill. Make sure you're long. This midpoint line here and 323, I think you can be long above that. Just like we said in SPY, if price comes down and fills this gap and keeps going, that's going to be bearish, and you probably should figure on a move back down to 319 in the top of the down channel. Here's more detail on the gap locations. We're going to be up in this area, 325 or higher. At least that's where we're at now. Use that as your pivot point and be aware that there's a $3 gap. There'll be a $3 gap below, depending on where we open. Yesterday, had a good chance, if you were quick, to buy 317. That would have been a great trade for you. That was a level that we had on the chart. You had a reach back candle out of the gate. Then you came back to that level again. So you had 2 bites at the apple on the 30-minute chart to get long. And then you had no reason to exit the rest of the day unless you just wanted to, take your profits here at, 323, 322 and not hold anything over. That was an easy trade if you got in here. If you didn't, it would have been you'd have had a harder time getting in because you really wouldn't have any line to shoot against. So, but that turned out to be a good trade. IWM. Use 212.50 to 213 as your pivot level. If price can take that out and hold above, you can be long. If it stalls here, you can be short. You can see we clearly broke out of this downward channel on a, well, let's look at the 30-minute chart a little bit easier. We were down here on the open. The first move here above 207, 207.50, that was your buy point, not only on the recapture of 207, 207.50, but also on the breakout of this downward channel. And then again, all positive bars and nothing to scare you out of the trade. Here was another buy point on the break above 209.50 and then a push up to 211. So we're going to open, the last time I looked, up near 212. If we pop 212.50, that's a good place to either roll up your strikes and stop or get long, because remember, re-entering a prior trading range targets the opposite side of the box. So a recapture at 212.50 would favor a move to the top of the box at 215. Facebook. Spent some time below the open. I believe it actually came down here, down into this 255 and then bounced. And I bought 260 on the reclaim at 260. That's where I bought. I am hoping we get up into this 266 range, and if that is taken out, looking for 270. So see how far this bounce can take us. If it stalls out, I'll just exit my position and then wait to see, if it rolls over or if it does in fact break out. But that was your buy point, 260. Apple got the 38% fib bounce yesterday, so that can be your toggle point today, which sits at 135. So I believe above 135, the bulls can be long with a stop just below, and then look for 136 and then 138 on the upside. But if it stalls here, back to 133 and potentially 131. Tesla had a really nice day. You'll recall, unfortunately, I had taken a short position Friday on this break at 800. So yesterday morning, when 800 was reclaimed, I exited my position. So that turned out to be fairly expensive, just because the options are expensive, and if you're looking for 800, 725, and you're down here, price going against you by $20 or $30, that was expensive. But what I could have done is, of course, say I was wrong and then get long. I didn't do that. If you weren't in at all, then that was the perfect setup for you to get long. You could see this fake breakdown here. You saw 800 be recaptured. That was your long, and that was good for 40 bucks with just going higher throughout the whole day, never looking back. That would have been a really nice trade for you. And if you took that, kudos to you. Microsoft, we talked about 232, and we talked about 230, and we talked about Microsoft having one of the stronger charts within the FATMAAN names. So if you bought that opening test of 232, you were golden, and just went right on up with basically a $10 move off of support up to 243 and backed off into the close. I think 243 is your pivot. If we break out to new highs, buy. And if you're long from lower levels, move up all your stops and your strikes. I think if we crack 243, I think we're going to 250 or higher. So that's a location that needs to be taken out for the bulls to keep it going. And I am sitting in 242.50 calls. So I've got a horse in the race on this one. Amazon. Free 50 club times 2 yesterday. Let's take a look at it. We gapped higher, so you couldn't have bought that, right? As soon as we opened, we were up 20, 25 bucks. Here was your buy on the recapture of 32.50. If you bought that, you got 3,300. That was your free 50. If you weren't in it, when price broke through 3,300, you got another 50. So that was the free 50 club times 2. Buy point 3,250, buy point 3,300. So you got $50 out of both buy points, which is why it's the free 50 club, right? So now Amazon was up about $35 pre-market. If you get a gap fill off the open and you pull back into 33.50, 33.45, that's your buy point. And then hopefully that turns around and runs into the print. And then you'll have to decide whether to hold it or do whatever you're going to do with earnings. But if you got a pull in to 33.50, 33.40 in there, I think you got a good low risk long. Google might have been tougher to take here. We talked about it in the morning. At the very least, you could have bought 1870, and that was good for $40 on Google, because here was your well-defined level. Price broke through there, good for $40. Filled the gap. So now, today, 1910 is your pivot. If price breaks above and holds, you can be long, looking for a run into earnings. If for some reason it stays weak or stays below, I think you got to wait, unless you're trying some kind of earnings strategy. Netflix didn't do a lot yesterday. We had identified this 535 as your pivot. If you got it, great. And you got $10 out of it if you closed here. $5 out of it if you were, if you just kept holding. But this one's in a downtrend. Lower, definitely lower highs. And, here we had a higher low, but not a higher high. And we've got a series of lower lows here, here, and here. So what Netflix needs to do is put in a higher low here. So here's your first one. Here's your second one. And it's got to take out this high here so we can get a series of higher highs and higher lows and complete this reversal. So still in a downtrend, not as exciting at the moment as the other names, but these things go in cycles. There'll be a day when Netflix wakes up, and then you'll be ready if you set your alarms at the places where you want to buy. You'll be able to participate in that. Notice here the PPO is below the 0 line and RSI is below 50. That's a bearish setup, as you know. So keep that into consideration. If you see both break above their key levels, if you see PPO break above 0 and you see RSI break above 50, then we may be in for a stronger, bull cycle run. So let's recap. Very bullish day yesterday. Largely negated the Friday sell-off. We've still got an elevated VIX, so we can't just fall asleep and, pile in long everywhere and just assume everything's going to be okay. At least that's not what I'm doing. Still kind of cautious on the piling into duration trades, playing more close to the vest with stuff I can watch during the day. If your strategy is different than that, or you're swing trading various names, pare back on your overall market exposure and just watch your overall risk. So let's see how we go today. Big earnings after the bell, Google and Amazon. We had earnings before the bell on UPS and Baba. I looked at UPS. It popped pretty good after earnings. So we'll see what Baba did. I haven't looked at that one. Take a look if you're interested. And then, yeah. So if you're new to the channel and you like what you've heard, please hit the subscribe button and the alarm bell. That way you'll get all my content, along with looking over in the show notes for links to the blog site and a link to register for all my content. If you do that, you'll get an invite link to the trading room, where we've had a lot of success lately, especially for active traders. But if you're more of a swing trader, or if you're have a regular job during the day, still register, come visit, flip through the posts at night or at your leisure, and you'll be able to glean a lot of good insights for your swing trading and longer duration trades. There's a lot of good ideas in there, a lot of tickers I'm sure you've never heard of that you can put on your watch list and do really well with over time. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.